Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into KonaTel's 10K report for 2024, and let me tell you, it's a roller coaster. Did they strike gold or is it fool's gold? We're about to find out. KonaTel is a company that operates in the telecommunications sector, providing services through its subsidiaries Appian Systems and Telecom, also known as Infinity Mobile. They deal in everything from hosted communication platforms to mobile voice and data services, even dipping their toes into government subsidized programs like Lifeline. First, the basics. This is an annual report, meaning it covers the whole year, ending December 31, 2024. KonaTel is a smaller reporting company, which means they get to skip some of the more detailed disclosures that larger companies have to make. Like any modern company, they face cybersecurity risks, and while they say they haven't had a material incident yet, they acknowledge the ever-present threat. They use industry best practices, ongoing employee training, and monitoring tools to combat these risks. They also inform their management and board about critical issues, so it looks like they're taking it seriously. The company doesn't own any real estate. Instead, they lease office spaces in Plano, Texas, Tulsa, Oklahoma, and Johnstown, Pennsylvania, where their subsidiaries operate. These leases range from a few years to as long as 2030, so they're pretty well set there. Good news here, they aren't currently involved in any major lawsuits, which is always a plus. Now let's move to the juicy part, the financials. Their gross revenues dropped to $15.5 million in 2024. A decline from the $18.24 they made the previous year. That's a decrease of about 15%, mostly due to the ending of the Affordable Connectivity Program, or ACP, which provided subsidies for low-income customers. Their cost of revenue also decreased, dropping to $12.1 million from $14.90, $90 Jubbler dollars is to subscribers, again due to the end of the ACP program. Here's where it gets interesting. Even with the drop in revenue, their gross profit actually increased slightly to $3.41 million. So even though they sold less, they made a bit more per sale, probably because they were able to reduce their acquisition costs. However, operating expenses jumped up to $7.95 million, an increase of $1.6 million due to higher payroll expenses at Appian Systems. So while they saved some money on the cost of goods, they spent more on running the business. Now, for the big swing, their other income skyrocketed to $9.21 million compared to a loss of $820,000 the year before. What happened? They sold a 49% stake in Telecom to Accession Telecom. All of this nets out to a profit of $4.49 million, a huge turnaround from a $3.94 million loss the previous year. So they managed to pull off a profit despite some challenges, mostly thanks to that sale. Looking at cash flow, they brought in $826 million from investing activities, with the bulk of it stemming from the sale of Telecom's membership interest. Despite all of this sentence in the filing stood out to me. The lack of our success with any of these foregoing initiatives raises substantial doubt about our ability to remain a going concern for the 12-month period from the date of this annual report. Basically, they say they might go bankrupt. Now, the key risks. First, they mentioned the possibility of the government reducing or eliminating the Lifeline program, which, as we saw with the ACP, could severely impact their business. Second, they acknowledged that they face intense competition from much larger players like AT&T and Verizon, who have way more resources. There were some shifts in leadership. Todd Mercer and Jason Welch had their official roles end, but they are still around as consultants tapping into their expertise while new growth initiatives come online. Looking at the stock ownership, Deshaun McEwen, the chairman and CEO, owns a big chunk of the company, around 37%. This means he has a lot of control over what happens. On the regulatory front, KonaTel has an insider trading policy to make sure no one's using non-public information for personal gain. They have blackout periods where insiders can't trade before financial results are released, but there are exceptions, and they have recently amended the policy to allow the exercise of stock options paid with fully owned shares. Finally, let's check out some recent happenings. Certain agreements were restated with Accession Telecom. In addition, they received a payment of $150,000 on a note from Accession Telecom in March and are planning on implementing healthcare initiatives and Viva sales initiatives. So what's the verdict? KonaTel is at a crossroads. The loss of the ACP program definitely hurt, but they made a smart move by selling part of Telecom. However, that doesn't completely solve their problems. They need to find new sources of revenue and manage their costs carefully, or they might face some serious financial trouble. And a lot rides on how all of these new agreements and initiatives turn out. Thanks for watching. If you found this breakdown helpful, give us a thumbs up, leave a comment, and don't forget to subscribe for more corporate deep dives. See you next time.